What is going on, ZCommunity cuties? It's your boy Azizz Finance, and I know, I missed you guys too, but we're back at it. We're coming back even stronger with a tutorial on Questrade on how to place the wheel strategy. So basically, what is the wheel strategy? It is essentially you starting off with a cash secured put, and then if it gets assigned, you do a covered call. Once the covered call is assigned, you then go back to placing a cash secured put, and you keep recycling it over and over again. That is why it's called the wheel strategy. If you have no idea what a cash secured put or a covered call is, then it's better that you just leave this video, go to our channel and watch the videos that I've made specifically on these two different types of strategies, because both of these make up the wheel. And as you can tell probably by looking at the title of this video, this is for you if you are using Questrade as your broker. Obviously you could apply the same principles to other brokers as well, so if you want to stay and watch the rest of the video, by all means. Alright, so let's actually illustrate the first step of the wheel strategy, which is placing a cash secured put. For the sake of this example, we are going to actually be using Apple, which obviously if you're watching this through an iPhone, you know what this company is. Now, what you're seeing on the screen right now is just the overall on what's going on with the stock. As you can tell, you've got your level 1, your level 2. For the cash secured put, we don't have to worry about this whatsoever. So what we can actually do is go up to where it says simple lookup and then make sure that your little gray highlight is on OPT rather than stock, because this will show you then the options chain, or as some people like to call the options table. So what we're going to do is we're going to type in the Apple ticker symbol, click on Apple, and what it's going to show us over here is the entire options chain. Now there, I believe, is no way for us to actually see calls individually and puts individually. For that, you'll probably need to get IQ Edge, but in the meantime it shows us both, which is whatever, like I'm cool with that. Obviously if you have a certain expiration in mind, then you can just press on near and select the expiration date that you're looking for. But in this case, let's just say that we're going to go 30 days out, just because that's usually like the strategy I go about, and it'll give you more of an idea of how these things actually work. So as you can tell in that top left corner where it says 175.30 and it keeps going up and down, that's telling you what Apple is currently trading at, and this is going to be extremely crucial for picking your strike price, which is usually highlighted in the blue over here. Now this is where it comes down to the cash secured put, because using this strategy you're basically saying, hey, you know what, I personally feel that Apple at 175.50 or whatever that 2 decimal point is, I feel like that's too expensive for Apple. I would actually rather end up buying it if it was, for example, at $170 or $165 per share. That's the only time that I'll actually go into it and say, you know what, this was fair. And that is where your actual strike price selection is going to come in. If again you feel that 170 is more of a fair point to enter Apple as a stock, then you'd select your strike price as 170. If you think it's more fair to get in at 160, you'd pick 160, so on and so forth. So based on your little assumption or your valuations as to what you think Apple is worth, you're going to end up clicking that strike price. So in the case of 160, let's just say, this little window is going to pop up, but you need to make sure that if you're doing a cash secured put, that you have it highlighted on put, because then it's going to give us what the put option is worth for this expiration and this strike price. There's a few pieces of information over here, and depending on the strategy that you pick, some or all may be important to you. So, you know, for most of the time, people really just pay attention to the price, but as you can tell, the bid 150, the ask 155. So when you're placing this order, you probably want to go for somewhere in the midpoint. You'll also see a bunch of other different factors over here, such as, you know, the days to expiration, which we already know, the delta, and all of your other Greeks, along with implied volatility. But for the sake of this video, I'm only kind of teaching you how to place the trade itself. So let's just say we want to place a cash secured put on this. So we end up pressing buy or sell, and then after that we have this little tab opening up on the right hand side. This is where it's going to tell us all of our details and basically, you know, reviewing the trade before we actually go about it. So the first thing you want to pay attention to over here is the option type. Make sure this is selected to put as a cash secured put rather than anything else that you see over here. Then in terms of the quantity itself, this will ultimately depend on your position size along with your risk management and how you want to go about this trade. For the sake of this video, we'll say 1 contract. Now Now keep in mind, these options, they have a direct correlation with the stock itself. So if you're placing one options contract, that's going to equivalent to 100 shares of stock, 2 contracts, 200 shares, 5 contracts, 500 shares, so on and so forth. So for the sake of this example, when we're putting 1, that means that we are willing to buy 100 shares of Apple stock if the price ends up getting to that 160 point or below. And obviously we're looking at the expiration here. We want to make sure that it's selected at where we want it to be, because there are times where Questrade will kind of have these little bugs that'll make the expiration date different. The strike price, you also want to double check this as well. We said we wanted to do this at 160. We felt it was a fair valuation for Apple. And then the type, obviously you want to double confirm that it's on put. For order type, this is ultimately up to you. I always like to go for the limit so I can get that sweet spot of right between. And as we can see, it's really trading in between 148 and 152. And again, I like to always aim for the midpoint. So in that case, it would actually be 1.50. Right on the top. For the duration, if we press day, then the order is just going to be open until market close, which is around 4 p.m. Eastern time. And once we have checked to see if everything is looking good to go, we're actually going to press sell. We're not going to press buy, because the way that a cash secured put is set up, you have to sell the put. So what we're going to do is we're going to press on the sell button, of course, and then this little window is going to pop up, and essentially it's going to give you an overview of the trade that you're about to place. So as you can see over here, the price of the put option is 150. And because again, this represents 100 shares of Apple, then they end up timing it, and we're going to end up getting a $150 credit within our account. The commission and fees, obviously Questrade isn't really blessing man's there. And then it tells you all your differences, what's your change in buying power and all that. If everything looks solid, then you're all set to press send. But if you still need to make some edits, then you just press on do not send, make the modifications that you need, and then just wait. It's a waiting game with the wheel strategy. Now that you've placed your cash secured put, there are a few things that I want to mention here. Number one, the reason why it's called cash secured is because you have the amount within your account, because there is a potential in early assignment or even assignment overall. And what does this mean? This means, let's just say by the time expiration comes or a little bit before, you notice that Apple had some news event that ended up making it go from the 175 that we were seeing a few minutes back, and it ended up tanking. It tanked to like $150, $155, whatever the case is. If it dips below your strike price, you have the potential of being forced to buy these Apple shares at the strike price you selected. In our example, we were looking at a strike price of $160. So if it's at $155 and somebody decides to early assign you, you're gonna be forced to buy Apple at a price that's higher than what it's trading at. So it's a really big risk and something that you really need to, be very attentive to, because especially in a situation where you don't have this cash within your account, you're going to be heavily in the red. And that's something that we always try to avoid, regardless of the type of thing that you're trading. So let's just say we fast forward, in a situation where the stock price is actually higher than the strike price we selected, then it just expires and we just place another cash secured put. But in the situation where you do end up getting assigned, you do end up being forced to buy these shares of Apple at $160 per share. What's next? Comes stage 2 of the wheel strategy in itself. So now we're going to bring it back to our screen over here, and we're going to be now at the little options chain once again. Now in this situation, we're assuming that you guys signed the shares of stock. It's $160 per contract, and now we go to the second stage, which is writing the covered call. The reason why it's called a covered call, you already own the shares of stock, but instead you're just selling a call against the shares. Now, strategically speaking, if you're smart about the choices that you're making, you want to make sure you're always profiting. So at this type of situation, you got to make a decision. And this decision is essentially, what am I comfortable with selling these Apple shares at? Considering that you ended up buying it at $160, you definitely want to make sure that the strike price you select is going to be higher than that. So, whether that's 165, 170, 175, so on and so forth. But you have to come into terms with what you're comfortable with letting these shares go for. In the case of this example, so they show you how to actually place the covered call aspect of this, then let's just say we want to aim for $170 as a strike price. If we look at the math on that, we get it's just a $10 profit on the shares of stock itself, and then dividing it by what you bought it for, then you're basically in a situation where you can make a 6.25% return just off of being assigned your covered call, whatever. So let's just say now you actually want to go ahead with this covered call. What do? Again, you click on the strike price that you're comfortable with selling the Apple shares at, but rather than it being placed on put, make sure that it's highlighted on call over here. Now, obviously these prices that you see over here, they're not going to be as high, after you get assigned the shares, because there's a lot of things that factor into it, especially with it being in the money. So don't pay attention to these right now, but when the time does come and you do own the shares, you definitely do want to pay attention to them. Otherwise, the same data points that you'll find here, your option Greeks, IVs, volume, all of that other good stuff. But for you to actually place the covered call itself, you press on that green buy or sell button, and then you just review the trade all over again. Now, make sure the option type is selected on call. The quantity, you want to make sure that it aligns with what you got assigned. So if you got assigned 100 shares, quantity's got to be 1. If you got assigned 500 shares, quantity's got to be at 5. You got to make sure it's step by step. Then you have to double check that your expiration date is selected on where you wanted it to be. Same thing with your strike price, and then making sure again that it's highlighted on call. And then same thing with the limit, order type and durations, but then where you want to focus is the limit price. You want to try to aim for something that's right in between the bid and the ask. Now again, don't pay attention to those $9 price tags, because this is just an assumption that we're under, but looking at the average between those two, I'd probably say that the midpoint is 9.10, and once you've reviewed everything, it looks good to go, you are going to press sell again. Then you'll see your message pop up, you'll review the order, you make sure everything is looking beautiful, and that is pretty much it. If it looks good to go, press send. If it doesn't, don't send, and go back, modify, so on and so forth. Now, very similarly to the cash secured put, with the covered call, there is a chance that you might be forced to sell off your shares at whatever you selected the strike price with. And that's the entire point of the wheel strategy, right? Your intention is you want to do this on a high quality stock that you truly believe in, and you shouldn't be in a situation where if you get assigned, whether that's on your cash secured put or your covered call, you don't want to get emotional about it. And that's the importance of doing this on high quality stocks, because you want to make sure that the wheel is always spinning, not getting halfway up there and then repeating your process again. It's okay if that happens, because there's just premium coming into your account without being tied to shares specifically, but it is something very important to keep in mind. And one last thing that I do want to mention is that in order for you to actually place a cash secured put and get your foot into the door with placing the wheel strategy on Questrade, you do have to be qualified for level 4 options, which means that you are going to have $25,000 within your account to actually establish this trade in the first place. Otherwise, you're just going to have to start the process from buying the shares outright, selling the call, and then repeating. This is going to apply because if you're trying to do this on your TFSA or your RRSP, then you won't be able to kind of initiate the wheel strategy by placing a cash secured put, because Questrade just simply doesn't allow you to. It has to do with government regulations and whatnot, so don't blame them. There's other people to blame. Nonetheless, that is pretty much it. If you guys do have any questions, leave it in the comments section down below, and I'm happy to get back to you guys. But nonetheless, I'm looking forward to seeing you guys in the next 2 weeks. It's your boy Azizz Finance, signing out. Peace.